The local share market has pretty much wiped out all the gains it's made since the year began. The All Ords finished trading with a steep 1.5% loss, with tech and lithium doing quite poorly. And the smaller banks were a major drag on the market, as it seems investors are still a bit worried about whether their money is totally safe. It is, by the way. So even though US regulators have promised to protect customers who deposited their hard-earned cash in the now defunct Silicon Valley Bank, shareholders of US regional banks were panicking, judging by the huge sell-off we saw overnight. And that pessimism spread to global markets, with big falls across Asia, the UK, but a tiny loss on Wall Street. Speaking of pessimism, investors rushed to buy the US government's safe 2-year bonds overnight, and that caused their yield, or returns, to suffer their biggest plunge in decades. It's now lower than the US Federal Reserve's overnight lending rate, which suggests the market is now betting the Fed is finished with its interest rate hikes, and rate cuts could soon be on the way. And locally, markets are even betting there's a 90% chance of Australia's Reserve Bank pausing its rate hikes next month, and the rest are betting on a rate cut. Meanwhile, the Aussie dollar was a bit weaker at 66.6 US cents, while oil and gold fell and iron ore prices had a decent jump. And that's finance.